Thank you for tuning in and welcome back to Home Buying Tips. In today's episode, you'll learn about 4 credit mistakes that kill your home buying dreams. My name is Andrew Finney. Please consider me your real estate geek. I am always here to help. If you need help finding a top agent where you live or you simply want to say hi, drop me a line. My contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. So let's go ahead and get into those 4 credit mistakes that will absolutely kill your home buying dreams. The number one mistake that a lot of people make is being afraid to rate shop. So when you're shopping for a mortgage, you can rate shop, and it's not going to impact your credit score in the way that you might think. The way that the credit bureaus are going to look at this is they're going to look and see that you're applying for one mortgage, and that's the kicker there. One mortgage, not several mortgages, but one mortgage. And if you're doing that within a short amount of time, let's say you're doing it within 30 or 45 days of actually going in the contract of your new home, then you're going to not get dinged all those different credit pools. So don't be afraid to rate shop, and don't be afraid to make sure that you're finding the right lender for you. Now, I will urge you to take into consideration that there's more to a home loan than a rate. There's also the strength of the lender. You should be checking out those lenders' reviews. You should be reading their ratings. You should be checking them out and seeing how many times they're actually able to close on the loans that they originate. Unfortunately, a lot of times, about a third of the time, all escrows, so in other words, when you're in the closing process, about a third of the time, those escrows will fall. And the number one reason is going to be because of financing, making a mistake. Either you made a mistake, the lender didn't do what they should have done up front with getting a bona fide pre-approval letter, which for reference means that they verified your income, your assets, your credit, and your employment. If the lender didn't ask you for all those documents with your tax returns, your bank statements, and everything else, then you don't have a pre-approval letter, and you might have problems whenever you get into the closing process, and you more than likely will. Something to think about. But the tip right here, the mistake that a lot of people make, is being afraid to rate shop, being afraid to talk to more than one lender, being afraid to have your credit pulled. But if you're doing it, keep in mind, if you are doing it and you're doing it within a certain amount of time for one mortgage, the lender's going to recognize it through their Vantage score and the FICO score and the way that they work those algorithms to know that, hey, that we shouldn't be dropping them because they're applying for credit or looking around because of rate shopping. So don't be afraid. It's okay. So mistake number 2 is actually forgetting your due dates on the bills that you have with your credit cards and everything else. And especially if you're like in your 20s, or if you're in your, hopefully by the time you're in your 30s that you've caught on to this, but they don't exactly always teach credit management in high school and in university. So unfortunately, it's not really taught anywhere unless you're reading online or watching videos like this. And there can always be a temptation to tell the lender, hey, I'm going to pay you back on this date, and this is how much I'm going to pay you. But guess what? You agreed in writing whenever you got those credit cards, whenever you took out those loans, and if you're not making good on what you agreed to in writing with them by meeting the due dates, paying at least the minimum amount that you're supposed to be paying, then it's going to drop your credit score. You're going to just see it spiral down out of control like a flame going down that just got hit. So you want to make sure that you're paying very close attention to that, because what's going to happen when you get into the closing process, not only was your credit pulled up front to make sure that you were credit worthy and everything was sound with your income, your assets, your credit, and your employment situation to get the pre-approval letter, the lenders, most lenders are going to actually pull your credit again, what's called a soft pull, if you will. So it doesn't ding your credit or anything, but they're going to kind of look into it and see if there's any new hits on your credit, if there's any delinquencies, or if there's anything else going on. And even if you were pre-approved for a loan and you have a delinquency, you can derail yourself right there from being able to close on your home. So don't do that. When you get in the escrow, don't buy nothing, don't do anything different than what you are already doing, and make smart financial decisions. Mistake number 3 is living like a high roller on your credit cards. And I mean, that temptation is there, especially when we're young and we're getting started in life. Maybe we're not earning as much money as we would like. We see nice things, we like nice things, and we go out and we are building up our credit, and then all of a sudden the credit company say, hey, oh, by the way, we can increase your limit from $3,000 a month to $30,000 a month, or $30,000, and you're like, oh my God, I'm going to go buy everything. I'm going to get brand new everything. I'm going to get new clothes. I'm going to get new stuff for my rental, or whatever the case may be. But what happens is when you're living like that, you're really hurting your credit card debt and income metrics. And what that means essentially is that a lender's going to take a very close look, and your credit score is going to be very closely aligned with the relationship between your credit card balance and the credit card limits that you have, as well as the number of accounts with the balance associated with your accounts. So the higher balance to limit ratios and the more accounts you have, the lower your credit scores will be. So be careful about that, okay? And don't go shutting down credit cards before you want to get to a mortgage either. I always tell people whenever they're 6 to 12 months in advance and they contact me and they say, hey Andrew, we're looking at buying a house, but it's going to be like 6 or 12 months before we're ready. I say, cool. I said, would you like to be put in touch with a great lender that's happy to chat with you about your options? They're like, well, isn't that too soon to get a pre-approval? And I always say it's never too early to start preparing for your success, because it's really not. If you start working with a great loan officer right out of the gate and you have a trusted real estate advisor that introduced you to that great loan officer, perfect. And the reason that it's perfect for you is because they're going to be able to assist you and guide you and keep you from making some of these 4 mistakes in this video and other mistakes I've talked about and my lenders have talked about in other videos, like the 13 home buying mistakes video that I made with Josh Coomer. So that being said, shutting down an account can be as bad as opening a new account, because part of your credit score is also the length and age of your accounts. So if you're shutting down credit card accounts, every time you're shutting down one of those, especially if there was a delinquency or a collection on it too, it can actually reactivate that, and it'll also destroy the age and history of your credit. So you want to be careful about that. And if you have any questions about that, please contact your trusted real estate advisor. If you need help finding one, again, I'm happy to help you with that. Ask to be introduced to a great local loan officer. The key word there is local loan officer. And the reason being is because they'll be more familiar with all your first-time home buying programs, any state, local programs that they have to assist you. They're going to take the time. They're not going to treat you like a number. They're going to treat you with the respect and compassion that you deserve and make sure that all your questions are answered. So mistake number 4 is actually opening a new credit account. Well, just like shutting down credit card accounts and everything else, opening a new credit account can be just as devastating. And the reason being is because now you just added to your possible debt, especially if you're using it and charging on it. And of course, if you're getting that credit line, they're going to want you to do that. And it's going to increase what's called your debt to income ratio. I'm making another video about what is a debt to income ratio, or simply DTI, debt to income ratio. And I encourage you to watch it and learn more about what is a debt to income ratio and how it impacts you, and things to know and look out for out there. So, these are 4 things that can lower your credit score, 4 mistakes to avoid with credit mistakes that are quite common that people make. Why don't you tell me which one of these mistakes are your favorite to keep away from, and tell me which one perhaps you've made, and along with any other mistakes that you would like to share with us. And please do so in the comment section below. Let's help our community learn and grow together and keep each other on solid footing going forward, so everybody becomes stronger together. Now, if you haven't, I'm going to go ahead and put my contact information up as well. If you want to reach out to me again to help you find a top agent, or simply drop me a line to say hi, absolutely love to hear from you. If you haven't already done so, I'd like to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know is going to be able to help. Between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today. Enjoy a wonderful day.